with the first session that we had, which is the Excel for productivity, we noticed that some of the students are not having their laptop with them. So it's a bit challenging. So try and then get your laptop with you so that you follow with whatever we'll be doing. So I will invite Ernestina to take us through what you'll be doing today. Thank you very much.
Okay, thank you very much, Marcus. Good afternoon, everyone. Like Jonathan said, my name is Ernestina Mensah Otabil. I'm not related to Pastor Mensah Otabil, for those of you that know him. Yes, so as much as possible, I would want this session to be as interactive as possible. So I will just go on and then share my screen and show you what we are going to do for today. Hi, Johnson, please, are you saying something?
No, please.
Okay, sure. Then let me go ahead and share my screen. Okay, so kindly confirm if you can all see my screen.
Yes, we can.
You can see your screen.
Okay.
Yes, please.
Awesome. So we are going to start with what you are going to learn for the course for today. So at the end of the day, what we are going to do is that we want all of you to acquire some financial modeling skills, and then the skills would help you carry out your financial task faster than before. And then also you'll be able to build valuation models from scratch. And then also you'll be able to measure the performance of a company with their financials. So now let's delve deeper and then understand what financial modeling is. So we actually get many questions about what financial modeling means and how important it is in the financial industry. I mean, you as an individual, if you get hands on this particular skill, it will really help you go a long way in your career path, because now a lot of organizations are looking for individuals with these skills. So I'd advise and I would urge all of you to take it very seriously, even as we take this course with you. So now let's define what a financial modeling is. So it's actually a spreadsheet-based abstraction of a real company, and then it helps you estimate the company's future cash flows, and then the financing requirements also, and then the valuations, and whether or not you as an individual or a company can invest in another company. And then also financial modeling is basically going to help you like be able to be very fast in your analysis of a company too. So there are sorry, please, if I'm going fast or anything, you can just tell me. You can raise your hand and tell me, or you can just unmute yourself and tell me if I'm going fast. And if you have any questions too, you can put it in the chat box, or you can raise your hand and then you'll be called on to ask a question. Okay, so now we move to the types of financial models. So there are actually 4 categories of financial models, and that is what is basically used in a lot of companies. So the first one is the 3-statement models. So for the 3-statement models, for that one, we have the income statement, we have the balance sheet, and we have the cash flow statement. So the income statement, balance sheet, and then the cash flow is what makes the 3-statement model. So at the end of the day, you are going to build an income statement using financial modeling. You are going to build a balance sheet using financial modeling, and then also you are going to build a cash flow statement using financial modeling. That is the first type of financial modeling. And then the second one, the second type or the second category we have the valuations and then the DCF models. So the DCF models, that is the discounted cash flow models. So with that one, we have the NPV, and then we have the NPV, which is net present value, and then we have the amortization schedules and others. Please, any question to this point?
Please, what's the DCF? What does it stand for?
DCF is discounted cash flow models.
Okay.
Yes. So my colleague will take you deeper into it as time goes on. So I'm just doing the introduction for you, and then my colleague will just delve deeper into it.
Okay.
Okay, sure. So now we move on to the characteristics of great financial models. So for a financial model to be very great, or for you to have a good modeling in your finances, what you have to know is that it has to be very, very efficient. So efficient in the sense that it will allow you, the person putting the model together, and the analyst to make the best use of your time. So that is the efficiency part of a financial model, because it is time friendly, and you'll be able to manage your time with financial modeling. And then also we have the consistency and then the formatting. So your consistency in the financial model should be like, it should flow, and then the model layouts too should flow, because like it will be able to make the reader understand its logic, and that it is able to also successfully pass from one author to another author. And then also we have the clarity. So the clarity, as the name just suggests, financial model, when somebody sees it, or when an analyst sees a financial model, he or she should be able to know what the company, like how the company has performed with just the financial model that you are showing. So it needs to be easy to follow for not only one, like it has to be easy to follow for not only the very person that is producing the model, but then also those dissecting it and then using it to sort of forecast the future financial numbers. So these are the three important characteristics of great financial models. So you have to know that it has to be consistent, it has to be efficient, and then it has to have some clarity in it. So we move on to the basic financial terms in financial modeling, which my colleague will take on from there. Okay, so now let's take financial modeling with Excel. So at the end of the session, what we expect you to do is to use Excel to forecast the company's performance. So what this means is that to begin financial modeling in Excel, you must be familiar with the financial statement, you must be familiar with the budgeting, you must be familiar with forecasting, and then others. So the overall goal of this course is just to help you build financial models, which you may already be sort of familiar with. So the course content, which my colleague will take you through deeper, are we are going to take a look at the investment appraisal using net present value approach, how to prepare a simple forecast, how to do computing, and how to compute an amortization schedule, and then also making an analysis of a company's performance using ratio. And then also we are going to delve deeper into forecasting profit and loss, and then balance sheet. So Mr. Sergio, over to you.
All right. Thank you very much, Ernestina. Can you all hear me? If you can hear me, you can send a message in the chat. Ernestina, can you hear me?
Yes, please, I can.
Okay. All right. So we are about 30. Okay, 30. That's a good number. Let me share my screen. Can you see my screen?
Yes, I can see your screen.
Yes, we can.
Okay. All right, that's fine. So Ernestina just took us through the introduction for financial modeling. And I want to know if you guys are comfortable with all what she said, like if you have an idea of what you're about to do. If there's any confusion, you can let me know before we start. You can raise your hand or you can send a message in the chat. I'll take a look at it and then reply you. If not, then I'll start. Can I start?
Yes, please.
Okay. So Tina spoke about what a financial model is and then what financial modeling with Excel is. So I'll just like to add a little bit to that before I go on. Yeah, so basically a financial model is forecasting or estimating a company's financial performance based on past performances and then assumptions. So that's what financial modeling is, trying to estimate a company's performance based on what has already happened in the past or based on some assumptions about the company. So when we say financial modeling with Excel, it means that we are now coming to use Excel, Microsoft Excel, to do this forecasting and then estimation. So in simple terms, that's what we are going to be doing. So what that also means is that, like, before you use Excel to do this financial modeling, you should already understand what the financial models are. But then don't worry if you don't understand. Before we start each session, I'll take you through like the accounting or finance aspect of it. Because financial modeling is just trying to use Excel to do your usual accounting and then finance work. So it is expected that you should already be familiar with some basic accounting and finance terms. But if you are not, it's fine. This is like an introductory course. We are not going to go very deep into it. We are going to do introductory stuff. So don't worry if you are not familiar with some accounting and then finance stuff. So Ernestina mentioned that we'll be doing investment appraisal using the net present value approach. So I don't know, does any of you know what investment appraisal is, or if you've come across the term before, if you've studied it in school or you read it somewhere? Has anyone heard of investment appraisal? Okay, so Abubakar, you can unmute and talk. I hope you can all unmute. You can unmute and then talk.
Hello. Hello.
Yeah, I can hear you.
Okay. Investment appraisal is it deals with how an investment gets a return.
An investment.
How
Abubakar,
one
can you
invests.
speak louder? It's very difficult to hear you.
Hello. Please, can you hear me?
Yes,
Yeah,
it's better
better.
now.
Okay. It deals with how one invests in the capital assets and gets a return or like an increment from its investment in that capital asset.
Okay. That's a good point. I think I'll take one more from Osaya Asante.
Yeah.
You can unmute and then talk. Osaya Asante. Osaya Asante, Michael.
Thing on investment appraiser is doing analysis from various investment portfolios to possible investment opportunity and make a
Okay.
decision for an organization or for yourself. Thank you.
All right. Thank you very much for your response. Yes, so I think Abubakar and then Osaya have given us very good points about what investment appraisal is. So yeah, and actually for today we will be doing investment appraisal with NPV. So when we start, I'll add a little more flesh to what they've said. So aside that, we'll be doing forecasting, preparing a simple forecast, computing amortization schedule, ratio analysis, and then forecasting profit and loss, and then balance sheet statements. So when we get there, I'll add more flesh and then explain what all these concepts are. So I'll also like to show you some of the exercises we'll be doing for this course. So the first one you see over here is calculation of net present value. So this falls under the investment appraisal. So we are going to do something like this today. Then this is an amortization schedule. It has to do with loans, repayment of loans. So we also get to that. And then this is just a simple budget we will do, I think, next week. So I just wanted to show you some of the things we'll be doing with regards to this course. Okay. So now, investment appraisal itself. So what I have here is that investment appraisal is an analysis done to assess the profitability of an investment. So when Abubakar and then Osei were speaking, you could hear them talk about investment, like making analysis, analyzing a portfolio. In basic terms, it's just analyzing your investment to see whether it's profitable or not. I'm sure if any of you would like to make an investment, maybe if you want to buy a car for Uber, or maybe you want to set up a shop, you by all means try and analyze it to see, okay, so I'm spending maybe 1,000 cedis on this car or on this shop, and then I'm expecting to get maybe 5 cedis each month or 10 cedis each year. I'm sure you do this kind of analysis to see or to advise yourself if you should go ahead with that investment. And so basically that's what investment appraisal is about. Using some analysis to be able to advise yourself if you should go ahead with some investments. And so there are some ways of doing investment appraisal, but for this course we'll be doing just the net present value. There's another method called the payback period. So payback period has to do with like how long will it take for me to recover the amount I invested in that investment. So for example, if I should invest 1 million in a project, am I going to get my 1 million back in a year or in 2 years or in 3 years? And so that's what the discounted, the payback period is. And so what happens is that if you do the analysis and then you're able to determine that, okay, so if I should invest 1 million today, I'll get my 1 million back in 3 years. If that's okay, if the 3 years is okay for you, then you can go ahead with that investment. But if you are someone who thinks 3 years is too long, maybe you think maybe by that 3rd year, if you want to be around that, then based on that analysis, you decide not to do the investment. Okay, so any questions so far? Someone says my voice seems low. Can you all hear my voice?
Yes, please.
Okay.
Yes.
So Caroline, probably it's just you. Maybe if you can increase your volume or something like that. But I'll try and speak up too. Okay, so any questions so far? Let me check. Okay, there are no questions in the chat. Yeah, for the slides, you get them. You get a slide, so don't worry about that. Okay, so for now, I've spoken about investment appraisal in general, and then...
Anthony, please, can you increase your font size?
Okay. Is it okay now?
Yes, it is.
Okay, yeah, so we've spoken about investment appraisal and then ways of investment appraisal, that's this payback period and then net present value. Okay, so net present value is the present value of all cash flows from an investment discounted to the present value. So I'll break this whole definition into bits for you to understand. So it says that net present value is the present value of all cash flows. So first of all, we have to understand what a cash flow is. So down here, I'm saying that cash flow is simply the flow or movement of money. Money going in and then money coming out. So for the example I gave about you investing in a shop or Uber business, if you buy the car for the Uber business, it's money going out. If you start making your daily sales, it's money coming in. For the case of the shop too, if you spend money buying the shop or constructing the shop, it's money going out. And then if you start making your sales, it's money coming in. So that's basically what cash flow is: movement of money going out and then coming in. Okay, so net present value is the present value of cash flows from an investment discounted to the present value. Okay, so even before we get to cash flows, you see this is the present value of all cash flows. So I would like to explain present value too. Okay, or even before we even get to present value, let's look at time value of money. So time value of money is a finance term. I'm sure some of you might have heard of it. Anyone knows what time value of money is? I want to hear from you guys. Okay, yeah, Osaya Santi Michael, you can talk in.
All right. My understanding on time value of money is to check the value of a particular amount of money within time range. So, for example, if you own 100 Ghana cedis at the beginning of 2020, and then you hold 100 Ghana cedis at this particular moment, are the value the same? That is the present value. So moving money within time. So it could be 10 years time, 5 years, or 1 year. The value, how much it's worth. Thank you.
Okay. Okay, yeah, that's perfect. Okay, all right, so that's fine. So yeah, so time value of money is basically trying to say that the value of money isn't constant throughout time. If you have 1 cedi today, that's today being November 26th, it's not the same as you having 1 cedi maybe beginning of this year, 1st January, or it's not the same as you having 1 cedi next year by this time, that's November 26th, 2023. Basically, that's what time value of money is. Can anyone tell me why I'm saying the value isn't the same across different periods? Or can anyone guess why? There's even a poll on my screen. Yeah, Prince, you can talk in.
Yes, I think it's because of inflation.
Okay. That's fine. Irene, I've not heard the lady's voice today. Irene, you can talk.
Yes, because if we invest that money at an interest rate, won't get the same value after a certain period.
Okay. All right, that's fine. Okay, so I think was it Prince? Prince talked about inflation, and then Irene talked about investing the money. Basically, they are all correct. Yes, inflation kind of changes the value of money over time. But when it comes to time value of money as a finance term, the reason why finance people say the value of money isn't the same throughout time is because of investment. So, for example, if I had 1 cedi at the beginning of the year, I would have invested it. So the assumption is that you would have invested that 1 cedi, so that by today, November 26th, you won't have 1 cedi again, but then 1 cedi and then some additional coins. So that's the assumption. If I had 1 cedi, so it's like time value of money tries to say that a cedi today, I had that, I think I wrote that in my presentation. Okay, so over here on row 14, so it is said that a cedi today is worth more than a cedi in the future. So what this means is that if I have a cedi today, that's if I have 1 cedi today, I can invest it so that by the time it gets to the future, it won't be just 1 cedi again, but it will be 1 cedi and then something else, which is actually better than you having just 1 cedi in the future. Please, do you get me? Hello, do you get me? Have I confused anyone?
Yes, please.
I've confused you, or you get me?
Now I get you.
Okay.
It
All
is
right,
fine.
that's fine. Okay. All right. So if you now know what cash flow is, you know what time value of money is, we can now come back to visit our definition for net present value, which is the present value of all cash flows from an investment discounted to the present value. So it means that when you do an investment, the investment is going to last through, or the assumption is that the investment is going to last through a certain period of time or a certain number of years. So within those years, there's going to be cash flow, meaning that there's going to be money moving out and then money coming in. So what net present value does is that all those monies that are going to be moving in and then coming out from the business, we are going to discount it to the present value. So discounting to the present value is that we are going to assume all those monies are in the present value. That is like this current time. So if, let's say, in our business, we estimate that we are going to make sales of 100 cedis in year 3, what we are going to do is that how much is that 100 cedis today? Okay. Or if I want to invest money to get 100 cedis at the end of year 3, how much will I invest today? Basically, that's what present value is, taking monies that you are expected to get in future and then recalculating that amount as if it is happening currently. Okay. So that's what we are going to do with net present value. And so one other item I would like you to know before we start is the fixed cost and then variable cost. So variable costs are costs that change in proportion to changes in level of activity. So examples are cost of materials, and then fixed costs remain constant regardless of the changes in activity levels. I'm sure most of you already know this, so I won't spend much time trying to explain it again. Okay, so we have to get to the question. You guys have the question that was shared with you, because I would like you to solve along with me. Do you have the question?
No, we don't have
No.
any question.
No one has it.
No question.
Please, is it the one at Google Classroom?
There's a question. There was a file shared. The name is Practice Question on Investment Appraisal. It should have been shared via the Google Classroom.
It's available in the Google Classroom.
Okay, so kindly check and then open it in so that we can all be on the same page.
So you can check your WhatsApp group if you are in the group as well for the file. I'm sending it there right now.
Someone is asking for the code. Which code is that? Those trying to get a question, please let me know if you are finally able to get it. To join the Google class. Mark Mills, is there a code?
So there is no code. A link has been sent to your various platforms. Okay, so just tap on the link and it will take you to the group, the classroom.
Hello, I think the link was supposed to be it was supposed to be a hyperlink, but the one there is numbed. It has no link to us. It's just the writings. So if you tap on it, it doesn't direct you to any place.
If you can try, then just copy the entire thing and then maybe paste it in your browser. It has been shared here as well. So whilst you are trying to get the questions, someone should be preparing to read the question for us. Anyone at all? Okay, I think I've given you enough time now. You guys should have the question by now.
Yes, we do.
Okay. Is that a building? Did I get
Yes.
your name? Okay.
Yeah.
Can you read for us?
Okay.
Okay.
So
You can see
practice
the screen.
question. Yeah, I can. Yes.
Okay. You can go
Practice
ahead.
question on investment appraisal. Net present value. BGS want to invest in an equipment costing GHS, that's Ghana cedis 150,000. The equipment will be used to run the e-learning program for the next 5 years. When the program is established, students will pay an amount of Ghana cedis 10, that's 10 Ghana cedis, I guess, for each use of the equipment. The amount will, however, increase by 6% each year for the next 5 years. BGS will incur a variable cost of Ghana cedis 5 per student. The cost will also increase by 8% each year for the next 5 years. Additionally, fixed cost of Ghana cedis of 20,000 will be incurred in each year by BGS. BGS expects to sell equipment to ABC Limited for Ghana cedis of 40,000 at the end of the 5 years. Below is the expected numbers of students to enroll in the learning program offered by BGS. So for the year, we have a table that has 2 columns, 2 rows, and 2 columns. So year and the number of students. So we have from year 1 to year 5, and then there is, for year 1 we have 10,000 students to enroll. For year 2 we have 5,000 students to enroll. For year 3 we have 20,000. Year 4 we have 13,000, and then year 5 we have 45,000. So the component cost of capital is 12%. I think something is cut off.
Can you see?
Not yet, but I think I should read from the one sent to. Okay, I can see it now. Okay. Then the requirements. Would you advise BGS to acquire this equipment?
Okay.
That's all.
Thank you very much. Yes, that's all. Thank you very much. So basically, you can see that this question is kind of adding up to all what I've been saying so far. So we are trying to make an investment, and then we want to know if we should go ahead and do that investment. We've been giving some assumptions that's going to guide us to do that. Okay, so net present value. Remember I said that net present value has to do with cash flows. Can any of you identify cash flows within the question? Any instance where money is moving out or is coming in? So I can already see one within a very fair sentence.
The cash flow, 150,000 that is going to be spent on the equipment.
Okay, so is that money going in? Will that money come in or it will go out?
It's going out.
Okay.
It's going out.
Okay. So in terms of time value too, will it happen now or it will happen later? Hello, Kofi.
It is happening now.
It's happening now.
Okay,
Yeah.
it's happening now. Okay, so and then the second paragraph, BGS expects to sell the equipment to ABC Limited for 40,000. So is that money also going out or it will come in?
It's coming in.
Okay, and in terms of time value too, is it now or later in future?
Later in future.
Yes, that's at the end of the 5 year. Yeah.
Yes, yeah.
Okay, so that's what time value of money is. So to be able to do this, we need to be able to compute the net cash flow for each year. Okay, so what net cash flow means is the money going in and coming out. What's going to be what's left? So, like if let's say 10 CDs came in and then 5 CDs went out, the net cash flow is 5 CDs. Or let me use 10 CDs came in and then 3 CDs went out. The net cash flow is going to be 7 CDs. Okay. So let me switch to my Excel so that we can start work. Can you see my Excel sheet?
Yeah.
Yes.
Yes, we
Okay.
can see it.
Okay, so let me take you back to this practice sheet so that you can see. So what we are going to do is going to look like something like this, but it's not going to be exactly like this. So you can just keep that in mind whilst we try to solve it. Okay. So before I start, what I usually like to do is that I like to disable the grid lines. Okay. So that it looks a bit cleaner. And then if I need to make any borders, I'll use the border function in Excel. So to get rid of the grid lines, I'll come to the View tab. And then this check mark here next to grid lines, I'll just uncheck it. So my Excel becomes plain. I hope you guys have also opened up your Excel and then you are going along with me.
Can you please repeat the action?
Yes.
Okay. But first of all, do you have your Excel ready?
Yes, please.
Okay, yeah, because I'd like you to work along. Yeah. Okay, so someone tell me to repeat the action. Okay, so I was saying that to make things look a bit clean, it's always advisable to hide the grid lines. Okay, so to hide the grid lines, you come to the View tab over here, and then you see grid lines here, then you just uncheck it. The look of my Excel might be a bit different to yours, but it's basically the same thing. We all have the same tabs and then the same functions in the ribbon. So when you come to the View tab, you see grid lines within the ribbon, and then you uncheck it. Okay. Maximize. Okay, so you can start by entering the name of the company, which is BGS. I don't know if I use BGS Limited or just BGS. Inputs BGS Limited. Okay. So as I said, based on the information we have to calculate the net cash flow for each of the years. The question has stated that the project will run for 5 years. So from the very current year to the 5th year, how much money is going out? How much money is coming in? If we find a balance, then we are going to discount it to the present value. Okay, so basically that's what net present value is. So let me start by, I'll represent each year in a separate column. And then in finance or investment appraisal, anything that has to do with time value of money, the current year is usually represented with 0. Okay, so let's say 2022 will be year 0, 2023 will be year 1, in that sense. So as I said, I'm going to represent my years in columns. So this will be year 0, that's the current year, 1, 2, 3, 4, and then 5. So I can just put here maybe 2022. 20. Okay. So I hope you guys know this. I'm going to select those two and then drag to the right so that it will automatically fill it for me. Okay. So I want to shift this down a bit. So I'm going to insert a row above the years, the rows containing the years. That's row 2. Okay. Okay. So to make things look nicer a bit, I think we can put a border below the years. Okay. So to insert the border, you can come to the Home tab. When you get to the Home tab, this icon over here, you can click on it and then select bottom border. I hope you guys are following. At the moment, I can't see what's the name? I can't see your chat. So if you have any question, you can unmute and then you speak up. Okay.
It seems you are moving fast.
I'm moving fast there. Okay. Sorry for that. Okay. But as I said, if you have any question, you can unmute and then speak to me because I'm not reading the chat now. The one who said I'm moving fast, did you get lost at any point so that I go over that again? So far, we've done autofill, we've done borders too.
Oh
Are
no,
you okay?
I'm okay.
You're okay.
Yes, please.
Can you come back again on the last line?
Is it the border?
Yes.
Okay. So let me undo this. Okay, so what I was saying is that, you see, I'm representing each year in a column. So you see that when I showed you what we have over here, the final work for a similar investment appraisal, you can see that we have some lines. These lines are called borders, and it makes the presentation look nicer. Okay, so I also wanted to insert borders below this row, the one that contains the years. So I said to do that in the Home tab. So to initially went to the View tab to hide the grid lines, but for the borders, we come to the Home tab and then there is this icon here. You can just click on it and then you select bottom border. For those of you using Windows, there's a shortcut which is Alt-H and then B-O. So if you want to use a shortcut, Alt-H-B-O. If you want to go the normal way to Home tab, you locate this icon. So when you locate the icon, I even forgot to say this, there are several types of borders. And then the text there also describes the type of border you'll be getting. So bottom border, which is a border below whatever cells you have highlighted. So for example, I've currently selected this cell, F11. So if I select bottom border, there's going to be a border here like this. Okay. I hope I can move on.
Yes.
Okay. Okay, so now let's get to work. So we have to find our net cash flows. And as I said, the net cash flows is the inflows and then the outflows, the differences between the two. Okay, so we will start by calculating our net cash flows. That will be the inflows, okay? So that's the money coming into the business. So let's check our question again and then read about the aspects that's talking about money coming into the business. So let me start. BGS wants to invest in equipment, blah, 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 blah. Okay, so all this is, when the program is established, students will pay an amount of 10 cedis for each use of the equipment. Okay, so you can see over here that students paying money to use the equipment is going to be money coming in for BGS, so which is going to be an inflow. Okay, so it also says that the amount will ever increase by 6% each year for the next 5 years. Okay, so BGS incurring a cost is an outflow. It's going to be money going out. And then additionally, fixed cost, which is also another type of cost, is also going to be money going out. Okay, So BGS expects to sell the equipment to ABC Limited for 40,000 cedis at the end of year 5. And this will be an inflow. So basically it means that within this project, money is going to flow in each year when the students are paying to use the equipment. And then at the end of year 5, when we also sell the equipment for 40,000. Those are the situations that's going to make money come into BGS, and that will be our cash inflow.
Hello, Anthony.
Hi.
Yes, someone wants me to ask this question for her. So
Okay.
does it mean that when you are calculating the net present value,
Mhm.
the process is what you are explaining to them?
Yes.
So
when I want to
first
calculate-
you have to do your net cash flow.
Yes, you
No,
have to do your
sorry,
net cash flow.
you have to sorry, first you have to see the cash flows that are coming in or the ones that are going out from your question. Then you
Mhm.
do your you do your net cash flows, and then
Yes.
also you make sure that the current year you discount it to 0, and then from there you add 1 to it, right?
Okay, so yes, in a way, yes. So let me try and go over the process again. So as you began, yes, you first have to find the cash inflows and then cash outflows, money coming in and going out. Then that will help you find your net cash flow. That's the balance of the money coming in and going out. And you do that for each year. So if the project or the investment is going to run for 3 years, you do that for 3 years. So after you've done that, you start, you are going to get net cash flow for each year. But here is where the time value of money comes in, because we are saying that 1 cedi at year 0 or 1 cedi at 2022 is not the same as 1 cedi at 2024. So for all the years and then for all the net cash flows we will get now, we have to discount them to year 0, so that it will look like all the monies we are getting from 2023, 2024. No? What will that amount be in 2022? Okay, so that's the process. Is it clear?
Okay, sure. I'm sure she has heard it. It's fine.
Okay. All right. So I think we've already identified our net and cash inflows. So okay. But one thing is that you see that we have to do some bit of calculations before we can input our cash inflows here. So let me just type this here. So revenue. Revenue is the sales you are going to make in each year. So like when students are paying to use the equipment, that's going to be our revenue. But then you consider the question didn't give a specific amount. It didn't say that in year 1 we'll get 100,000, 200,000, whatever. It gave us the price that each student will pay, and then it also gave us the number of students for each year. So to get the total revenue, we have to multiply the number of students. That's the quantity times the price. So let's do that now. So after we've done that, then we come and put the total values over here in this row, so that we can separate our workings from our final work. So you can just see that the NPV calculation is going to be our final work, but we have to do some workings before we get there. So let me scroll down. Okay. So calculation of annual revenue. Okay. So yeah, number of students, and then we have price per student. So year 1 to year 5. Okay. So instead of typing everything, we can just highlight it and then drag down to get to 5. So number of students, we can go and pick that from the question. So year 1 is 10,000. Year 2, 5,000. $20,000, $13,000, and then $45,000. Okay. So the price per student For the price per student, we will have to do a bit of calculations over there. So the question says that students will pay an amount of 10 cedis for each use of the equipment. This amount will, however, increase by 6% each year for the next 5 years. So basically, it means that for the first year, they are going to pay 10 cedis. For year 2, they won't pay 10 cedis again because it's going to increase by 6%. So what we can do is this amount times, so I can do times 106%. If you don't know why I'm doing 106%, you can alert me. Okay. So let's drag down and see if our formula will work. Okay. All right. So that's it. So we have the year, the number of students, price per student, and then total revenue. So that will be the number of students, quantity times price, which is this. So after we do for the first year, you can double click or you can click and drag down. If any of you are confused by this Excel function that I'm doing, you can let me know, okay? Okay, so I think
Please,
we
how
have,
did you calculate the price per student?
okay, so let's go back to the question and read what it says. The question says that students will pay 10 cedis for each use of the equipment. So let's just say each student is paying 10 cedis, okay, for the whole year. So the amount will, however, increase by 6% each year. So they are paying 10 cedis here for the first year, but in year 2 is going to increase by 6%. So that 6% increment is what I've represented by the 106%. So the 10 cedis. So if you check my formula, cell C24 times 106%, and cell C24 contains 10. That's the price for the first year. Are you okay? Can I move on?
Yes, please.
Okay. All right. So we have our total revenues here. But before we bring it to our NPV calculation, we have to tidy up the data a bit because it's not looking very nice. So what I would like us to do first is to introduce the comma separator. So you already know that we have commas in our numbers, like for thousands and millions and all of that. So we will first introduce the comma separator. And we are going to apply that on, okay, let's apply that for the number of students, the price, and then the total revenue. So we will select all of this. We will come to the home tab. Okay, so there's this number formatting group. The name isn't showing in my Excel, but you should be able to see it in yours. When you come to the number formatting group, you see a comma icon there, or a comma button there. You just click on it, and then you see that the comma separator will be applied to your numbers. And then we are going to leave everything at just 2 decimal places for now. Let's just leave everything at 2 decimal places. Okay, so aside the formatting, we can also apply borders to it. Okay, you remember we applied borders over here, the bottom border. But for this side, we will apply all borders. So you will select the entire data we have. Home tab again. We come to where the borders are. And then we select all borders. Okay. So to make things look a bit nicer, we can bolden our headers. So I highlighted everything and then Control B to bolden them. And then since you can see that some of the words are trying to hide, so we can use wrap text. I don't want us to expand the size of the columns. So let's use wrap text. So what wrap text will do is that it's going to bring some of the text down. Okay. So same home tab. We come over here. There's wrap text over here. Okay. Are we all on the same page? Is anyone missing?
Yes, Anthony.
Hello, yes.
Someone is
Ernestina.
asking how you click and drag
Okay,
That
okay.
sums the rest
Okay.
of the values for you.
Mhm. Okay, so let me go back there. So I think I did that over here. So let me erase all of this. Let me delete them. Okay, so after I've done my first formula to calculate the total revenue, so I'm currently on that particular cell. So if you look at the green border around the cell, there's a little box at the bottom right corner. Okay, there's a little box. So what you can do is that if you want to drag down, you can send your cursor to that box. When it gets there, you see that the shape of your cursor will change. Okay, so when you send it to that box at the bottom right corner, you can drag down like this, or you can double tap on it. But before you do that, you have to make sure that the cursor icon changes. Okay. All right. I hope it's fine.
Hello.
Yes, hi.
Please, my decimals. I'm getting different decimals from yours. Like you had 11.24, I had 11.0, 11.91, 11.7. They are different
Okay.
decimals.
So let me show you my formulas. So to check the formula for each of the pricing here, you can check from the formula bar over here. Okay. So you can see that it is C24 times 106%. So kindly check yours. Check for year 2. Check in your year 2, the formula for your price. Check if it's the same as mine and you are still getting different values.
It's the same as yours, but the first one I had the 10.6. I just had
Okay.
10.6, not
Okay, so check.
10.60.
Okay, all right. So, okay, I think I get. So, what happens is that mine has been formatted to 2 decimal places. So, I can make it 1 decimal place. Okay, let me try that and see if I'll get the values you are getting. Is it close to what you are getting? Or it's still different?
No,
It's still
it's still
different.
different. Yes.
Okay, so in your cell, your price for year 3, what's your formula?
It, it
Is this?
was
Mm-hmm.
it looks like the formula didn't apply to all.
Okay, so
Yeah,
it's
I
possible you
realized.
didn't. Okay, so you guys have to pardon me. I'm not. I'm intentionally skipping the Excel basics aspect. It's possible some of you might not be too familiar with the Excel basics, so sometimes I just assume you know, and then I go ahead with it. Okay, so let me try and do that aspect again. So I've just cleared my price, the values I have for the prices. If I input, I didn't clear the total revenue. The formulas are still there. So if I should put something there for the price, it will appear again. Okay. So the assumption is that, or from what we have in the question, it says that that 10 cities they are going to pay as the initial price is going to increase by 6% each year. Okay. So what that means is that, so for the first year they are paying 10 cities. That's fine. Year 2, they are not going to pay 10 cities again, but they will pay 10 cities plus 6% of that 10 cities. So the 6% of that 10 cities, like the 10 cities and then plus the 6% of that 10 cities is what I calculated by doing 106% like this. Okay. And that gave me the 10.6. So it means that in year 3 too, they are not going to pay 10.6 like they paid in year 2. But in year 3, they are going to pay 10.6 plus the 6% increment. So I didn't want to come and type 10.6, then I'll do times 10. So let's do that first and see if you get the same answers. So let me do that in this cell. So year 2 is 10.6, 10.6 times 106%. That's 11.23. Okay, 11.24. Okay. So now what I did with my formula was that I selected year 2's price and then multiplied it by 106%. You see, it's still the same thing.
Yes, I got it.
Okay. So instead of doing that for each cell, I can click and then drag. So I bring my cursor to the bottom right and then send it down. So I can clear this. Okay. So far, I think you are welcome. Yeah. So in terms of Excel, I think we've been introduced to borders, formatting, the comma separator and all that. Yeah, autofill too. Yeah. So after we've gotten our total, is someone asking a question?
Yeah, please,
Uh-huh.
with how you did your table, did you use the borders?
I didn't use the borders well.
I mean, like, did you use the borders to do the table?
Yeah. Okay, I use the borders. So how much time? We have 1 hour
Please,
more.
what about the total revenue calculation? I did not get that formula.
Oh, we didn't get that one. I did that like twice. So let me go through those two questions quickly and then we move on. So I'm going to clear the borders. So, okay, first of all, to clear your borders, you select all those borders that you want to clear. You come to your home tab, you see the border icon. This is what the border icon looks like. So when you click on the drop down button, there are several options you can choose from. No border. So no border is going to take away the borders. So I think when we started, we had something like this. Okay, now to apply the borders again, you select the range you want to apply it to. You come to that border button again. Over here, I don't want to do a bottom border like we did initially over here. So I come down and then I select all borders. Okay, so that's how we did the borders. And then for the total revenue total revenue is the price times the quantity. So before we go to the total revenue, we input the quantity from the question. All this is in the question. And then for the price too, we did a calculation. I went through that recently. So total revenue will be, you can see from my formula, B24. B24 has the quantity, the number of students, and then C24 has the price. So after doing that for the first year, I brought my cursor down here and then drag down or double click down to autofill down there. So that's how I got my total revenue. Is that fine?
Yeah, that's okay.
Okay, so let's continue. So we've gotten our total revenues here. So we have to now populate it over here. So instead of let's say typing it in, like, let's over here we got 100,000. I'm not going to type the 100,000 here, but then I'll use cell referencing. So in Excel, cell referencing means that, like, you picking up the address or the location of a particular cell. Okay, you can see that right now I want to pick up this 100,000. This 100,000 is in cell D. That's D24. Okay, for those of you who don't know how cell naming works, so you pick up the name of the column or the letter alphabet for the column, and then you add the row number. So this 100,000 here is in column D, and then the row is 24. So the cell name is D24. Okay. So I'm going to do equal to, you can type, if you can easily tell the name of the cell, if you can easily type the name of the cell, you can type B24 like this, and it's going to pick up the 100,000. But you're not going to be able to tell the name all the time if your data is a lot. So you just type equal to, then you send your cursor to wherever you want to pick. Okay. All right, so that's fine. Then for the next year too, you can just pick like that. I wanted to do autofill, but it's not going to work. So let me just do the manual way. Oh, I've made a mistake. So our revenue is actually going to start from year 1. So let me start that again. So like this. Let me check something. Okay, yeah, as I said, the autofill isn't going to, it's not working because we are trying to autofill horizontally whilst the data is vertically. So that's the issue we are having. So let me just do everything manual. Year 4, and then year 5. Okay. So we've done the first aspect of our cash inflows, which is the revenues we'll be getting each year. From the question, there's another aspect of the cash inflows, which is selling off the equipment at the end of the 5th year. So at the end of the 5th year, the question says that you will sell it for 40,000. Okay. So let me just put here sale of equipment. So he says that it's going to happen at the end of the 5th year. So year 0, nothing is going to be there. Year 1, nothing. Let me just put 0 there. 0, 0, 0. So at the end of the 5th year is 40,000. So the column for the 5th year, we input 40,000 over there. So I think by this, we've gotten our total cash inflows for each of the 5 years that the project will be running. Any question on the cash inflows? Any question? Okay, so let me move on. So I'll now add the two. So I'll call it total cash inflows. So over here is going to be the revenue. So in year 0, the cell that contains the revenue is B5. Next B5, then plus the cell that will contain the value for the sale of equipment in year 0 is B6. So B5 plus B6 will give us the total cash inflow for year 0, which is 2022. So after we've gotten that, instead of typing everything, I can select that cell again, bring my cursor to the bottom right, and then fill to the right side. Okay. So you can just check to confirm. I hope you guys are following, and then you are getting the same results as I'm getting.
Yeah.
Okay, that's fine. So to make things nicer too, I think we can bring a border on top of the total cash inflows. So what happens is that we want our border to be on top of the total cash inflows. So we are either going to select the total cash inflows and then apply a top border, or we select the row on top of it, which is the sale of equipment. Then we apply a bottom border to it. Okay, so since we've already done the bottom border, let me select the total cash inflow side, and then I'll apply a top border to it. Okay. So having done with the total cash inflows, we can go ahead with the cash outflows. So let's get back to the question and then check where we have cash moving out of BGS. So from the very first statement, if someone said I was moving too fast, is this still too fast? Please, let me check the question is. So how do you get a column of price per student? Please, how do you click and drag? Okay, I think I've answered all the questions. So what about the speed too? Is it okay? It's okay.
Yeah, it's okay.
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 All right. Okay. So back to the question. Okay.
Hello.
I was saying that the first sentence is a cash outflow. So BGS wants to invest in an equipment costing 150,000. Who can guess in which of the years that this investment will be done? The 150,000, is it going to be year 0, year 1, 2, 3, or 5? And where's Abu Bakar? Abu Bakar used to answer my questions. Where is he? Okay,
I
Matthew,
think it will be year 0.
Okay, year 0, that's fine.
Hello.
Okay, so that means we are going to put, what's the amount again? 150,000. So cost of equipment.
Hello.
Let me leave some space.
Hello.
Yeah, hello.
Hello, please.
Yeah, I'm listening. No.
Please, I got disconnected. So I think
Please.
some.
What was the last thing you heard? What was the last thing you heard? Let me see if I can try
I said
and go
my
back
network got disconnected. So you were moving from the calculation that we did down there. So you were
For
moving
which
to the
side, which
revenue part.
calculation?
Like immediately started the revenue. I mean,
Hey,
immediately
then you are
started
far
the
behind.
revenue part, then my network got disconnected.
Okay. It seems you are very far behind. So let's see. Let's just try and follow in. If you're able to end early, maybe I'll do a quick recap so that you can get back. Okay. Because there's a lot that went in when we're doing that calculation. So you just try and follow, and then hope that when we're able
The
to
video will also be available
Yeah,
to you guys, so you
exactly.
can go through.
Okay. So yeah, cost of equipment 150,000. Coming. Okay. So one thing I want to do is that for the outflows, I'll represent them with negative figures. Okay. So even though the cost of the equipment is 150,000, I'll just put here 150, negative 150,000. Okay. Okay. Excel has already automatically formatted the cell for me. I'll remove one. I wanted us to finish before we apply the formatting, as in adding the brackets to the negative values. But it has done that automatically for me. But when we are done, we'll try out different formats so we can continue. So the cost of the equipment, it was only purchased in year 0. So for the rest of the years, we can just put 0 there. So let me autofill to the end. Okay, so that's one cash outflow. Back to the question to look for more cash outflows. So students will pay, okay, the costs, this amount, okay, so there's the variable cost of 5 cedis per student, and it will increase by 8% each year. Okay. So another cash outflow will be the variable costs. So that one, to the question didn't give a specific amount. It gave us the price, 5 cedis per student. So we have the price and then we have the number of students. And the cost will also be increasing by 8% each year. So just like we did for the total revenue, we will work out the variable cost as well. So let's go down. And for this one, I want to do it vertically like the way I did this one. I'll do it horizontally. And then when we are done and there's enough time, I'll show you a way to convert this horizontally. Okay, we will copy and then paste special using transpose, but we will leave that for later. So let's do the calculation of annual variable costs. So I said I was going to represent this horizontally. So yeah, so this is going to be 1, 2, 3. Let me highlight the first 3 and then I'll drag 4, 5. Okay. So this is what I mean by like representing it horizontally. So after that, number of students. So yeah, one is 10,000, 5,000, 20,000, 13,000, and then 45. So total variable costs. Okay, let me do the variable cost per student. So variable cost per student. The question says the first year is going to be 8 cedis. Is that it now? 5 cedis instead. Yeah, 5 cedis. Then to increase by 8%. Okay. So the same approach like what we did for the price. So in year 2, this 5 cedis in cell B34 is going to increase by 6% to 106%. And then whilst the cell is selected, we can select it and then shift it to the right so that it will autofill for us. So if you check the formula bar, which is over here, or if you double click, you will see how the formula was applied. So in year 3, variable cost per student is C34. C34 is the variable cost in year 2 times 106%. year 4 to D34. D34 is the variable cost in year 3. Okay, so that's it. So we have number of students, variable cost per student, and total variable costs. So it's going to be quantity, which is number of students times price. So for the one who said he got lost when we were calculating the revenue, it's basically the same thing we are doing over here. Quantity times price, and then for the pricing, because the question says it's going to be increasing, we have to adjust it each year. So you can use this to kind of track back what we did for the total revenue. Okay, so we have number of students B33 times B34. That's total variable cost. Then we bring our cursor to the bottom right, and then we drag to the far end. So now we have our total variable cost for each year. So just like what we did, let's apply the number formatting. We go to the home tab, tap on the comma icon over here, so that it will introduce the commas and then put 2 decimal points at the end. Usually in finance and accounting, to represent values, it's always good to bring 2 decimal places, like to represent money. Yeah. Okay, so for the quantity like this, so let me show you for those of you who may want to get rid of the extra decimal points here, because everything is going to, it's quantity. And then number of students, for number of students, they are going to be whole numbers. We are not going to have something like 100.5. So there's no need to bring decimal places. So when it's like this.
Hello, Mr. Anthony.
Yeah.
The variable cost per student increased by 8% each year. I think you use 6%.
I use 6% there. Okay. Okay.
Yes.
So the good thing is that I can just go to the very first instance of the formula. That's it. So I started applying the formula in year 2. So I'll change the 6. Okay, you know what? Let's continue like this. I'll update the formula later. I want to show you guys something later. So let's continue like this. I'll update when I copy the variable cost to the NPV calculation, I'll update it so that you see it reflecting over there. Just to show you one advantage of using Excel for this kind of financial models. Okay, so let's leave it here for now. I'll update it later. Okay, so I was at removing the extra decimal points here. So home tab again, just around where the comma button is now, there are these 2 signs there. They tend to confuse me a lot as to which one is increasing or decreasing. I think the one on the right is going to decrease the decimal, just as it's showing here. So you can click on it. It takes away 1 decimal point. We click again and then it takes away the other decimal points. Okay, so I think our decimals are okay for now. So let's bring our borders. So I highlight the entire range and then home tab again. I come to the borders, select all borders. Okay, all right, that's fine. Some of my text is trying to hide. So okay, I think I can expand this column. I don't need to wrap text, so let me expand this column. Okay, so after we are done, we now have to transfer this total variable cost to our NPV table. Okay, so the variable cost starts to happen from year 1. So we can come here. So over here, we'll use the cell referencing again. So we are trying to pick up the address of the cell that contains the variable cost for year 2023. That's our year 1. And so at the moment, this 50,000 is in cell B35. So I know it's cell B35, so I can type equal to B35. You always have to bring the equal to. If you type just B35, you won't get the value. Okay, so equal to B35. In case you don't know the name of the cell name, like the name of the cell, and you want to pick it up, so equal to, then you bring your cursor to pick it up, press enter, and then you get your value. So it's a cash outflow too. And as I said, for the outflows, I would like to represent them with negative values, or I like to indicate, like I would like to put negative in front of them. So just before the B35, I put the negative sign there. Okay. And because this my NPV table is horizontal, and then I did the calculation horizontally too, I can drag to do the autofill. Okay, so let's try and confirm. I did it from year 0, right? So let me cancel that and start from year 1. So equal to minus then this. Okay. So let me drag to the end. Okay. So in year 2, there's 26,500, 26,500. So we are correct. So you can see some hashtags over here. So for those of you who don't know, what this basically means is that the column width, that's column E, this entire column is too small to contain like the value that's supposed to appear there. And the column width is too small, so we have to expand it. So to expand it, there are two ways. We can do it manually. So I'll do this one manually, then the other one, I think cell G and column G also has that issue. So for the manual way is that you bring the cursor to the end of the column. So column E, you bring it to the end like this, and then you drag manually. Okay, so you see that now the entire text is showing. So the other way is you bring it to the end of the column and then you double click. When you double click to it, will automatically expand for you. The difference is that when you double click, it will expand to fit it perfectly. But when you do it manually, it might be too big. It might be too big or too small. So that's the difference. Okay, so we have our variable costs for each year now. Okay. Any questions so far? Since I've done a lot of talking. Any question?
Yes,
Let's
Mr.
check
Anthony.
the chat. Yeah.
Please, why are your variable costs? Okay, both the cost of equipment and the variable costs began with a negative, a bracket, but mine is with a negative.
So is the formatting. So what I didn't even intend to put the bracket there, but then Excel automatically formatted it. So to confirm that, let me show you something. Let me select one of the figures with the negatives. So like cell C10. When you go to the home tab where we have the formatting options, you see that it has selected accounting.
Yes.
I didn't select it, but then it's automatically detected it and then selected accounting for me. So if yours is negative itself, don't worry. If you want it to show in brackets, you can manually change your format to accounting. But I wanted us to do that later after we are done. But if you want to change it now, it's fine. Okay. Can I go on?
Hello.
Yes. Hello.
Please, when I change my general to accounting, there is a dollar sign by the
Okay. You know what? You guys just don't do the formatting for now, because that formatting too is a whole
Okay.
aspect on it. Yeah. So let's ignore the formatting for now, so that when we get there, I can explain it fully.
Okay.
You should have added the dollar sign to the currency, but let's move on. Excel is like that sometimes. So for our cash outflows, we have the cost of the equipment and then the variable costs. I think there's one more cost too, which is the fixed cost. So when we check the question, it says, yeah, hello.
Yeah, please. The other guy complained of your calculation. You use 6%.
Oh, Charlie, thank you. So I wanted to show you guys like one advantage of using Excel for my financial models. You see, for those of you who already know MPV, you might have learned it in school. And then when you were doing it in school, you used your pen and then your rulers to do everything on a sheet of paper. One disadvantage of that is that if you make a mistake, you have to like cancel, like your mistakes are going to run through your calculations. Your mistakes are going to run through your calculations. So if you notice that you've made a mistake, you have to now come and cancel and then start again and all of that. So the advantage of Excel, the advantage of using Excel to do your financial models is that if you make a mistake, you can easily change it from the source and it's going to reflect. And it's going to reflect because we have been doing cell referencing. We have been referencing the cells. So that's why when we calculated the variable costs, when we got the results over here, I didn't type them manually. I just did equal to, then I picked the reference of the cell. So now that we've realized we made a mistake with our increments now. So I don't know, you guys can just try and remember the variable cost here at now is 50,000, right? So let's go and okay. In fact, this is going to be 50,000. Year 2 is 26,500. So let us update our formula. So it's going to be 8%. So it has abated over here as 27,000. When we go to our NPV2, it has abated as 27,000. So the advantage is when you make a mistake and you're able to locate it and then correct it, your correction is going to reflect throughout the entire work you are doing. Okay, so we've corrected for year 2. Let us drag to the end for year 5. Okay. Yeah, so basically that's what I wanted to show you, like the reason why it's very important to use Excel for financial modeling. Okay. So let's move on to the fixed costs. So the fixed cost to where's the question? How much is the fixed cost? Okay, 20,000. The fixed cost is 20,000. For that one, the question gave us the amount straight away, and then there are no increments too. So 20,000 throughout. So 20. Let me bring my negative. So 20. Okay, so you see that this time around, Excel didn't change the format for me. I don't know why. Let me try and enter it again. Negative 20. So that's why that's how Excel is sometimes. So when you are done, you then select everything and then do the formatting proper. So you bring it down and then drag to the end. Okay. So we can now calculate total cash outflows. Okay. So total cash outflow is going to be cost of equipment plus variable costs plus fixed costs. B9 plus B10. Maybe you also want to be B9, B10, B11, but mine is B9 plus B10 plus B11. Then I hit enter. Then I drag to the very end. Okay, so we have this hash issue again. So let me go to the end of column F and then double click. Okay, and then the column expands. So after calculating the total cash outflows, it will be nice if we bring a border on top of the total cash flow values. So I'll select it like this and then home tab. And then since I've selected this, I'll have to apply a top border. So it's going to be like this. Okay. So now we have our total cash inflow. We have total cash outflow. Who can guess what the next thing is going to be? Prince, are you around?
Yes, I'm around.
Okay, Isabella's answered. So yeah, so after we have our cash inflow, cash outflow, the next is our net cash flow. So net cash flow. So that's going to be equal to total cash inflow. My total cash inflow is in B7 plus total cash outflow, which is over here, B12. Enter. Once again, I click and drag to the end. Okay. So we have our net cash outflows. So what this means is that when BGS buys that equipment, in year 1, is going to spend money. It's going to spend 150,000. Okay. In year 2, it will spend 70,000, but then it will get 100,000 in return. So the net is going to be 30,000. In year, okay, that's actually year 1. Okay. So year 2 to the net is going to be 6,000. So it will gain 53,000 and then it will spend 47,000. So that's how it's going to be. But here's the case: all these monies are not in the same period. Some are currently, it's going to spend 150,000 currently, today, present terms. It's going to get 30,000 in next year, 66,000 the following year, 88,000. So time value of money is trying to say that, for example, this 6,000 in year 2, 2024, no, it's not going to be the same as 6,000 currently. Okay. Or this 88,000 in 2025, no, it's not going to be the same as 88,000 in the current year, that's presently. So we can't just add all of them together. Okay. So what is going to happen is that we have to discount them. So in finance, discounting means you are converting an amount in the future to the present. Okay. So this 30,000 in 2023, no, what will it be currently? This 6,000, what will it be currently? Okay, so that's where the discounting is going to happen. So to do that, I have to introduce you guys to discount factors. Okay. We'll use discount factors to do the discounting. So there's a formula for discount factors. I don't know if I have it here. Let me check again. Discount factors. I want to show you guys the formula for discount factors so that you can follow what I'm doing. Okay. Okay, so okay. I don't have it in my notes, so I have to show it to you on Excel. I'm coming. Okay, so let me open. Insert textbooks. Okay. Okay, so can you see the formula I have over here? Is it big enough for you to see?
Yes, please.
Okay, so this is the formula for discount factor. So I'll explain it to you here. So one just as in the number 1, and then R is the rate or cost of capital, and N is period. So if you check the questionnaire, there was the last part of the question, there was something about the company's cost of capital is 12%. Okay, so that cost of capital is what this R is. That's the cost of capital. So in basic terms, we use the cost of capital when we are discounting, when we are converting numbers from the future value to the present value. That's what the cost of capital is. It's usually in percentages. Okay, so that's the R in this formula. And then the N is the period. So is it year 1, year 2, year 3, or whatever? So that's the N. Okay. So for each of the years, we have to find the discount factor. So let's go back to NPV. Any confusion about the formula? Okay. So what we are going to do is that we are going to represent this whole formula in Excel. So discount factor, let's start. So year 0 is going to be equal to 1 divided by, so let me bring it to brackets, 1 plus R. So from the question, R is 12%. So for that 12%, we can either use 0.12 or we can do 12% like this. Okay. So 1 over 1 plus R, which is 12%, and then raised to the power. So in Excel, the sign to do raised to the power is for my keyboard is on top of the 6. It looks like this sign, the one before the N. That's the sign you use if you want to show raised to the power in Excel. So let me put that there. Raised to the power N. And then, as I said, N is the period in which we are currently in. Over here, we are in period 0. So instead of typing period 0, I'll just go and select 0 over here. Remember, I already put the numbering over there for each year. Okay. So our answer is 1. Any question about the formula and then how I input it into Excel? This whole thing is what we have represented over here. 1 divided by 1 plus 12%. So 1 plus 12% is into brackets. And then raised to the power B4. So B4 is the number for the current year we are in. Okay. So if there's no question, I'll click and drag to the end like this. Okay. So for example, in year 1, 2023, 1 plus into brackets 1 over 1 plus 12% raised to the power C4, and then C4 is 1. That's year 1. If you check the subsequent years too, it's the same thing. Okay. All right. So there are a lot of decimal places and there are a lot of decimal points there. So let me just reduce it to 2. Let me apply the comma. Okay, like this. So now present value. The present value is going to be the net cash flow times the discount factor. Okay. So that's what we mean when we say we are discounting. We are taking the values and then multiplying it by their discount factors. That's going to give us the present values. Let me drag this to the end. Then let me apply formatting to it. Okay. So we have our present values now. So what this means is that, for example, in year 2, this 6,000 we have in year 2, in present terms, it's actually 4,783. That's what it means. Okay.
Hello.
Yeah, hello.
Please, like with the year 1 discount factor, the number, the N equals to 1, did you do it manually or you drag?
So I didn't do it manually. I selected the 0 over here.
Okay.
I intentionally did it that way so that I can easily drag and then it will pick it up for me. Because if I had done 0 here, if I drag, it's going to be 0 throughout.
Okay, thank you.
You see, it's 1, 1, 1, 1, 1, 1. But I don't want to do it manually, so that's why I picked it up from here. So you can pick it. What's the error? Pick it up from there, and then when you drag, it's going to pick it up for you. Yeah, so as I was saying, all these values you see over here for the net cash flows, like this amount, it's 8,000 in year 3. Currently, it's going to be 62,699. Or what it also means is that if you have 62,693 currently, and then you invest it at a rate of 12%, in 3 years' time, you're going to get 88,000. Let me take it again.
80,000. Oh.
But what's the question? Are you asking a question? Hello? Okay, let me continue. So I was trying to say that.
Take it again.
Okay, so I was trying to say that so there are 2 steps. The first step is that 88,000 in year 3. It's in year 3. But as I said, it's not going to be 88,000 currently. But then this 88,000 currently is going to be 62,693.6. Okay, so that's one part of it. You can also see it that if you have 62,000 currently in year 0, and then you invest it at a rate of 12%, by the 3rd year, you are going to get 88,000. Is it okay? Is it okay? Okay, I'll assume it's okay.
Yeah, it's okay.
Okay, yeah, all right. So since we have our present values, we can now do our NPV finally. So let me just net. So as the name goes, we are net present value. So the net present value is going to be the addition of all the present values in each year. So we'll use the sum function over here. So equal to sum. Then we select the very first value. And then you can drag with your mouse, or you can press the shift key and then use the right arrow key to go to the end. Okay. So then we bring our closing brackets. So this is our net present value. This is our net present value. Okay. So now let's try and answer the question, that's the final question that was here. In the requirements, the requirement was that, would you advise BGS to acquire this equipment? So at the moment we have calculated our net present value, but what does it mean? This 137,000, does it mean we should acquire it or we shouldn't? Who knows the answer? Anyone? Yeah, Eden.
Yeah, I would say we shouldn't acquire it.
Why shouldn't we? Any reason?
Yeah, I would say because the present value of what we got is even way less than the 150,000 we used to acquire the equipment.
Okay, I get your point. Any other person? It's your point. Yeah, Bless.
What I've learned is that they said if the net present value is positive, then you should go in for the project.
Yeah, so this is where a little bit finance knowledge is needed. So in finance, when your net present value is positive, it means you can go ahead with the project because it's profitable. Who spoke first? I forgot his name. Eden, right? Yeah, Eden.
Yeah.
So Eden was trying to say that the 137,000 is less than the 150 we are going to spend in the current year. But yeah, it's true that it's less, but you should also remember that after we spend that 150 in the current year, we're also going to be getting these inflows in subsequent years. Even in year 5 alone, we are going to get 160. You see, so in year 0 or the current year, we are spending 150. Then we'll be getting inflows to year 4, and even in year 5, we are getting 160. So in year 5 alone, what we are getting is more than. So assuming we didn't get anything from year 1 to 4, let me delete this. You see, we are still making profits. The value is still positive. So I think you base your analysis on the net present value figure and then the cash outflow in the current year. But remember that each year money is coming in each year. So this net present value, is just the net of what is coming in and going out from the current period to the end of the 5th period. So that's what the net present value is. The total of what is going out and what is coming in from the beginning to the end. Okay, that's it. So Adam, do you understand it now?
Yeah.
And why? Okay, yeah. So as it says, if it's positive, that means your project is okay. You can go ahead with it. Yeah. So from what the question is requiring us to do, we can boldly confirm that BGS can go ahead to acquire the project. So that's what NPV is about. Okay, any questions? Any question? Any confusion? Any question?
Question, please.
Okay, go ahead.
Please, when you made a mistake with the percentage for calculating the variable cost, can you tell me the new percentage you used?
Oh, it was actually 8%. It's in the question. It was 8%, but I used 6%. So like we're solving the thing with our own question.
Okay, thank you.
Yeah, you're welcome. Any other question? No question, right? Okay, so I remember I wanted to show you guys something. Let me get to it. Let me share my screen again. I think after that we can end for the day. Can you see my Excel? Can you guys see my Excel? You can see.
Yeah, we can see.
Yeah.
Well, we can.
So remember that when we did the calculation of the annual revenue, I made a point that when I was transferring the total revenue to the NPV side, the NPV table, I couldn't do the cell referencing. I had to do it manually, this side. And the reason was that we are displaying this information horizontally. Okay, as in each year has a column. But then when we're calculating the total revenue, each year is on its row instead. So assuming we want to change it so that it will be like this, the variable cost instead. Assuming we want to do it like this so that each year will have a column, there's a way to do that. So we will use the transpose function. So basically what it does is that we will copy all of this and then we will paste it. But then whilst pasting, we are not going to paste it as it is, but then we will transpose it. So with transpose, it means your columns will become rows and your rows will become columns. Okay, so let me do that for you to see. So I'll copy all of this. So I highlighted everything and then Control C. Then I want to paste it here. So let me put my cursor here. And then for the transpose function, we are going to paste, but we won't do the normal pasting. So we come to the home tab and then there's a drop down button near the paste icon. When you click on that drop down button, you'll see a couple of options there. For today, we'll look at the transpose function. Okay, so let me select transpose. So you see how things are looking now. Initially, our years were in rows. So year 1 was in row 24, year 2 was in row 25, and so on. But after transposing it, year 1 is in column G, year 2, column H, in that order. So that's what I mean by our rows have become columns, and then our columns have become rows. Do you get it? So total revenues were like this vertically. Now total revenues are like this horizontally. So that's what transpose is. So now that the data is like this, no, let's just go back. Total revenue. Let me select this. Let me reference this cell. And then let me drag to the end. So it's still the same thing. So now that all is horizontal, I can easily select and then autofill it to the end. And then lastly, in terms of appearance too, we can decide to play a bit with borders. So we can add a border on top of the present value, because to get the present value, we did an operation on the 2 figures above. And usually when you perform an operations to get a value in a particular cell, it's nicer to put a border on top of it. So you select all of this and then borders, top border, just like that. And then for our net present value too, we can also apply tick bottom borders like this. Bottom double border, yeah, this one. Yeah. You can decide to bolden this. All this is by your discretion, but then it has to look nice. Okay. We can apply formatting over here. You can give it cell colors. Let's say we are using yellow. We can make here gray. I hope you guys know how to apply the cell colors. You just go to the home tab. There's this button over here, and then you apply your colors. I think my number formatting too isn't consistent, so I can select everything again. And then all my values aren't in cedis, or they are not currencies. The discount factor is not a currency, so I can't apply the currency format. Or maybe what I can do is to select everything and then leave out the discount factor. So after selecting the top part, then I'll press and hold the control key, and then I'll select the bottom part. Then under the number format, and I can select currency. For some of you, your currency might show as US dollars, but That's how your Excel wants to show it. Don't worry about that. Maybe at another time I can show you how to change the currency to Ghana cedis. That's custom number formatting. We have 2 minutes more. I would have done that, but we can treat that. We can do that before we start our next class next week. Okay. So in fact, it looks like the Ghana cedi sign won't even be nice. So let me change it back to, let me do its number, then number formats like this. Okay, yeah, this looks neater. Okay, yeah. So any question before we end the class?
Yes, I think Governor Selassie has his hand up.
Okay, ask your question then.
Please, we can't hear you.
With the fixed cost,
Fixed cost, what has it done?
It started in year 1. That's my problem. I was thinking it would start in year 0.
Yeah. Okay, yeah. I don't want to confuse you guys a lot and explain why fixed cost will start in year 0. So that's why. So fixed costs will usually start in year 0. Fixed costs are those type of costs that whether you produce or not, you will still incur them. Unlike the variable cost. So you see, for the variable cost, no, that one, even as the question even put it, no, it is the price per student. So it's dependent on the number of students. Okay. And in the first year 0, there were no students. So there won't be any variable cost. But for the fixed cost are those type of costs that whether you produce or not, you incur them. Or whether in this case, for our question, whether students enroll or not, we will still incur those costs. An example is rent. If let's say you want to organize classes and then we pay to rent a classroom, whether students come or not, we will still have to pay the rent. So normally fixed cost will start from year 0 as well. So if you want, let's add it to our.
Hello.
Yeah, hello.
With this question, the question was saying that the equipment should be, or let me see, the program will start for the next 5 years. So like it means like probably the equipment we acquired from year 1, like if let's say it's a classroom, year 1 forward. So why should the fixed cost start from the current year whilst we've not like acquired the equipment for them? What's the name?
So these were the type of questions I wanted to avoid. That's why I didn't want to hit on the fixed cost. So basically, it depends on the type of fixed cost we are talking about. You see, the assumption is that the current year is year 0, and we are buying the equipment in year 0. So it's kind of like once you have your equipment, you are likely to incur some fixed costs. Okay, so if you buy your equipment now, and you have to store it in, let's say that equipment is a computer. So when we buy it currently in year 0, we may have to put it in that classroom. And without paying the rent, we can't put it in the classroom. So it's kind of like before we even bought the equipment, we paid for that rent. Or immediately after we bought the equipment, we paid for the rent. But basically, like the assumption is that the fixed cost will also start from year 0. But I didn't want to bother you guys with that. That's why I just started from year 1. But we can do that since our cells have been referenced. I can easily put it there and then it's going to change everything. So let's say year 0, 20. We see that my net present value has changed. Let me clear it. Before it was 137. So after adding the 20,000 year 0, it's now 117. So the value is still positive. So we can still go ahead with the project. Okay. So that's one advantage with Excel. Like if you made any error or if you need to update anything, you just do it once and then it reflects everywhere. Okay. Are you okay with the fixed cost thing now?
Yes.
Okay. Any other question? If not, okay, we should acquire.
Hello.
Okay. Yeah, hello. Yeah.
Please, the calculation under the annual revenue, like this thing, then the content that you wrote under column 2, number of students, like how did you manage for that phrase to fix in one cell? Like my own spreading.
And so I did something called wrap text.
Oh.
I think I mentioned it too. So what happens is that let me give you a quick example. Let me apply the border so that you can clearly see that. So you can see that this text is expanding beyond column C. So there are two options to fix this. You can either drag to expand column C so that everything will fit like this. If you don't want to do it that way too, you can use wrap text, which is over here. This option is in the home tab, wrap text. So when you click on it, it's going to move part of the text below.
Oh, okay, thank you.
Okay, so that's it here. Okay, so I think we are okay for today. Ernestina McMills, are you available? Ernestina and McMills.
Hello, yes.
You're supposed to do attendance, right?
Yes, but McMills didn't share the link, so I think he will share it later.
Okay. So if someone says I should go over, we've closed the Okay, net cash flow. Net cash flow is the cash outflow plus cash inflow. Okay. If you check net cash flow, B7 is total cash inflow, B12 is total cash outflow. That's the net cash outflow. Okay. Okay. So we can end now, right, Ernestina?
Yes, but I think you forgot to mention that we'll send them an assignment to the Google Classroom that they can try their hands on.
Okay. Yeah. So just as Ernestina said, an assignment will be sent for you guys to try your hands on it before next week Saturday.
Yes, and this will form part of your assessment too. So as much as possible, let's all try and join the online class and then do our attendance as it is required, and then also do our assignments when it's given to us, and then also submit the assignment on time. So we are going to look at all of these so that we can get you your certificates at the end of the session. Prince, please, your hand is up. Please speak.
Yeah, so please, I wanted to ask if the recording will be made available to us within the week.
Yes, please.
Yeah,
so we'll put the recording to in their Google Classroom so that you can get access to it.
Okay, thank you.
Okay, you're welcome.
This with the attendance in the Google Classroom, like what should we